Welcome to the third edition of the Happy Investing Show. I'm getting a lot of interesting questions. I would request you to continue to ask me these questions because it does two things. It improves my knowledge and of course, I can share my experience with all of the viewers. Thank you again for all those who are taking their valuable time out and sending me emails and commenting and also asking me questions in person. In this section, I will answer 3 questions. This question is from a 22-year-old Baljinder Singh from Punjab. He actually has asked me a very interesting question. He says, my income is roughly about 60k per month and my expenses are about 20k per month. For the balance 40k, I'm contributing to the family corpus because they are indented for around 15 lakh rupees at 15% interest. My family income is roughly about 4 lakhs per annum, put it all together. The question that he's asked me is, should I start investing from the 40k that I'm saving or continue to contribute to the family corpus and reduce the debt? A great question. And the answer is one word. Don't invest at 40k. Go ahead and close that loan which is running at 15%. It's way too much. Even if you invest in the market, you're going to make only 14-15%. But if you keep reducing the debt, there are 2 things that can happen. One, you're guaranteed 15% because you're reducing the loan. Plus, it gives you a lot of mental comfort and there is nothing equivalent to mental comfort when it comes to investing. So Baljinder, go ahead and close that debt as soon as possible and good luck for that. The second question is from Shilpa Nair. She is 27 years old and is from Kochi, Kerala. She's asked me a question which is about indexation. What is indexation and how does it help a debt fund? To answer that, indexation is nothing but the cost adjustment for the inflation that has happened during the period of investing. In other words, when you invested a certain amount of money today and withdrew it after 5 years, the inflation would have caught up. You need to pay taxes and government says, don't pay taxes for the inflation that has happened. That is called indexation. It is widely used in real estate and also in debt investments. The government allows you to use indexation benefits if you have invested into a debt fund and held on to it for more than 3 years. So let's assume that you had invested in a debt fund that gave you about 24% return in the last 3 years. And you cross 3 financial years and therefore you're going to get 3 indexation. And just for the sake of simplicity, the indexation is 7% each year, which means 21% is the cost of inflation for the same 3 years. Now, when you deduct 28%, which is your growth, with 21%, which is indexation, you're left out with 7% of net indexation growth, and you have to pay tax only on that 7%, which is at 20%. You pay 1.4%. So the 28% return that you had now will get reduced by 1.4% and your net growth is 26.6%. This indexation is used effectively by a lot of long-term investors to move their money away from fixed deposits into debt mutual funds. I hope I answered that question, Shilpa. Finally, a question on insurance. This is a question from Uttam, who is 31 years old and is from Maharashtra. I bought this term insurance very recently and my insurance agent said that if something happens to the policy holder in the next 2 years, the nominee will not get anything because there is something called a waiting period. Is this true? To answer that question, Uttam, there is nothing called a waiting period in insurance policy. Yes, there are few insurance companies which will say that if there is a suicide, they may not really honor that commitment. But on the other side, if the policy holder dies of natural causes, the insurance company will make sure that they will do a lot more thorough analysis on the reasons for the death, whether disclosures made, was everything declared in crystal clear ways so that there is no falsehood in the policy when he bought it. This is the only thing that applies to insurance. There is no waiting period. I hope I answered that question, Uttam. With this, we come to the end of third episode of the Happy Investing Show. Please keep asking me questions. Till then, happy investing.